The stock of the morning will be Infosys. IT major Infosys is being investigated by the Directorate General of GST Intelligence for alleged evasion of integrated goods and services tax amounting to 32,403 crores. Haripriya joins us with more on this. Haripriya, what is going on? I mean, this is a huge inquiry. 32,000 crores is not a small amount.
That's right. 32,000 crores is what probably Infosys makes in a year in profits. So it's a big amount, and it's under the scanner of Director General of GST Intelligence, and it has gotten a notice. So the tax authority says that Infosys is liable to pay IGST under the reverse charge mechanism for the services it receives from its overseas branches. The rationale here is that these overseas branches are seen as distinct establishments, and the services provided by them are considered as imports under the IGST Act. That's why they are liable to pay these taxes. And so far, Infosys has also been including expenses for its overseas branches in export invoices from India and using these values to calculate eligible refunds. This is what has been found out in the initial investigation so far, and the investigation will be continued as well as what the tax authority is saying. The company, however, has dismissed this, and the statement it issued, it's saying that they've received the notice and they've responded to the authorities, but the authorities saying that it comes under IGST is not something that the company is accepting, and it says that so far they've paid all the GST dues and are in full compliance.
Okay, so the question at the heart of it, thank you for that, Haripriya. The question at the heart of it is that if a company creates an overseas branch to service clients, does it attract IGST or not? That is the long and short of it. And in Infosys' case, since this has been going on since 2017, the bill has shot up to 32,000 crore rupees. Abhishek Rastogi, founder of Rastogi Chambers, is joining us for more light on that. Very good morning, Abhishek. Great to speak with you. Just first off the bat, if this gets accepted and Infosys has to pay this out, does this set precedent? Because there are a large number of companies which have overseas branches to service clients. That's the business model of the IT sector.
I think a very pertinent question. It may set a precedence for sure. But the question today is that I don't see if there's a show cause notice and there would be a requirement to shell out that sort of a money. Infosys should stay here or would stay here at the appellate level. They would straight away go to the court to challenge this show cause notice on the ground that these are services to self. And what is important is to identify whether the export transaction and the import transactions should be treated as a mirror image. When it comes to export, the rule is very clear that the service provider and the service recipient must not be merely an establishment of a distinct person. Now, that is absent from the import of services definition, and that's a reason that this controversy has arisen.
How important or how significant will place of provision of services be in terms of relevance in this case?
No, I think that will be the key factor, because what happens is that these services, whether from a branch or from a separate entity, are rendered and received by the Indian service receiver in India. The question is whether the place of provision of these services will be outside of India or will be in India. So, for instance, there could be different set of services, because what we understand is that the notice or the communication also says that they are doing some sort of marketing for the services. Now, those could be intermediary services for which the place of provision will never be in India, because as per the rules, these are outside of India. And hence, on those transactions or those services, even if these are rendered by my overseas branch to me, which I will always argue on first principles are services to myself and hence should be out of the tax gamut. My second leg of argument will always be this, that these services, the place of provision of these services is outside of India, and hence these should not be taxable as import at all.
Abhishek, let's so explain this very, very simply without a lot of the legal jargon. I know tough for you to do, but let's try it. At the end of it, the question is that whether an overseas branch to service clients is a distinct entity which needs to be taxed separately or not. What has been happening so far? Because this is obviously something which has been going on for a while. And what has been happening with other companies which have overseas entities? Are they being treated as a distinct company or a distinct entity which needs to also pay tax?
So let me explain it in very simple words. When I operate through a separate legal entity outside of India or in several jurisdictions, these separate entities are liable to tax and to get the export benefits both. So if it's an export, I get the export benefit. And if these are imports, I get to pay the tax on the import of these services. The question is, when I'm operating outside of India, not as a separate entity, but as my branch, because I need to facilitate the rendition of these services outside of India. The question is whether this branch, which is nothing but part of my legal entity, can render any service to me. The answer, as far as the law is concerned, as far as the import of services definition is concerned, is silent on this aspect. While it is very clear in terms of the export, that export benefit will not be given when these are merely distinct establishments. But the answer is not very clear, or it is very ambiguous when it comes to import, because there is nothing which is mentioned with respect to establishment of a distinct person as far as imports is concerned. And hence, these companies have not been paying taxes. And I would say most of these IT companies have not been paying taxes because they have taken this view that these are the services rendered to myself. And the law is very clear
Abhishek,
that for the tax to be applicable, the service has to be rendered from one person to another, which
Got
is
it.
not the case.
Got it. So, Abhishek, sorry, but because just in order to simplify this, is Infosys the only one which is liable for something like this, or do you reckon that this opens up the Pandora's box because others may not also, quote unquote, have paid? And any assessment there? Any insights you have there?
No, certainly it will open the Pandora box, because Infosys is just one of those companies which has taken this view. And I think industry-wide, the view is very, very clear that these are services to self and hence should not be subject to tax as far as the import is concerned. So I think it opens the Pandora box, and it will, the investigations will now go to a lot of ITES companies, and for that matter, for all of those other companies also which operate with branches outside of India.
Right. Abhishek, one last question. What happens next now? There is an inquiry and there is a response. What do you anticipate in terms of next steps that are going to be undertaken by both parties, and what is the sort of timeline we're looking at? Will this go into a bit of a long-drawn proceedings? Because let's not forget that the annual profitability of Infosys is about 25,000 crores, and this is 32,000 crores we're talking about.
So I think tax authorities would certainly want Infosys to pay some part of it. There will be some measures or requests, etc., by which the tax authorities would want some money to come. I think what Infosys would do and should do must challenge this notice straight to the jurisdictional high court and try to take a stay on this. Also, if Infosys challenges the definition of import of services so that it gets read down, so that it is very clearly provided by the court that once these services are between the branches, these are services to self, I think there would be no requirement of any pre-deposit, or, when you're going to appellate forum, you need to shell out money in terms of paying the pre-deposit. That can be saved if we can get a stay straight from the High Court on this transaction.
In that sense, has just started. Thank you so much for that insight, Abhishek Rastogi there. I want to get an idea of what kind of a stock impact we'll see this morning. So Sandeep Agarwal is joining us for this. He's fund manager and co-founder of Sovilo Investment Manager. Sandeep, very good morning to you. Straight, off the bat, the big question really is that how big a hit is this for Infosys, considering that the company has responded also fairly quickly, saying we've paid all our taxes and we'll take this legal process forward?
Hi, good morning, and thanks for having me on the show. I have been tracking the IT sector for now 22, 23 years, and I can tell you with reasonable confidence that, generally all of these large names like Infy, TCS, Wipro, they have been very, very compliant. Now, there could definitely be, an interpretation issue or something like that, because of which this kind of things can happen. And I believe, although I am not neither a lawyer nor I have an understanding on the legal side, but I can say that uh, investors trust Infosys and they believe that they will do the right thing and whatever is required will be done. And Infosys is a company which will never shy away from paying the right dues if required. So I don't think there will be an impact on the stock. I don't see this as a reason to have a big impact. Obviously, 2-3% negative reaction from people could be there, but I don't see this as a ground for any kind of reaction on the stock. They have always been compliant.
If there is a react, because the earlier GST expert was saying that this opens the Pandora's box for similar verdicts on some of the other companies too. If by any chance this brings about a reaction, you in your assessment would you go out and invest into or take advantage of that dip?
So, we don't invest based on 3-4% reactions and all that. We have our ideas, but
Sandeep, the reason I asked this because I remember you earlier saying that you turned constructive on IT, right? So dips could be used to buy into, which is why I was asking.
Yeah, so we have our own financial models based on which we do buying and selling. So there are different parameters. But let me put it this way: if it opens up like the previous spokesperson spoke, and truly, then obviously it will have an impact on the whole sector. So then the whole sector will have some earnings cut, and all those things will happen. So it is not specific to then Infosys, because everyone is in similar business. Everyone has branch office, and every kind of more or less the modus operandi for everyone is similar, because you have to execute business in a particular way. So I believe that, if there is a knee-jerk, very sharp reaction, then obviously it is a very good opportunity. The upgrade cycle and the earnings have started. So I think it is a good opportunity for people who have missed the stock earlier. They can obviously, use this as an opportunity to enter. So that is a view.
Right, you're right. It is a good opportunity, and if you are an investor looking to add to Infosys, like Sandeep indicated, this too shall pass, and it should have no stock impact.